One of the most important parts about being a successful investor is you have to make sure that you're not making the greatest of assumptions. It's called margin of safety. And I want you guys to know, this is a concept that was very tough for me to understand years ago. After brainwashing myself, not having anybody to guide me, not having the internet to guide me, it took time, but you have the benefit of being here. So if this sounds confusing, do not worry. Watch a few more videos. It'll start to click. Mo, he's a newcomer to the value investing world, and he learned very quickly. Why? He was just around the right people, right, Mo?
Yeah, exactly.
So,
you, Gary,
yeah,
read the right books, immersed myself in it.
Correct. So Tesla just came out, and they're starting to offer discounts.
Yeah.
On their cars. Now, let me ask you guys a question. Can you imagine a world previous to today, in the last 5 years, in which people said Tesla was going to offer discounts?
No.
And that's the key here. We always make these grandiose assumptions. A company's doing great, and we think this is going to do great forever. Guys, two things. One, it's not possible to do great forever because if you grow at 20% a year for the rest of the time, mathematically you can't because you will become larger than the entire world economy at a certain point. And that's not realistic. Look at Warren Buffett. He's done 20% returns since 1955. But he always says, as we get larger and larger and larger, our returns will get lower and lower and lower. Why? Because it's harder and harder to get outsized returns as you get larger and larger. Same with Tesla. When you look at Tesla and say, okay, they're doing great, but at some point as they get larger and larger and larger, they can't grow to the levels. And that's what has been my argument against Tesla's valuation, saying in order for them to justify, when Tesla was at $400 a share, I think we did a video in which I said, Mo, did you remember? I think Tesla to justify that valuation had to basically sell number of new cars a year. And I'm not going off memory, that equated the entire world's new cars per year.
Yeah,
it was something obscene. Or they had to,
it was absurd.
They had to have some major percentage of it. Is it possible? It's possible that they have 50% market share.
Anything's possible.
Correct. Is it probable? And in the world of investing, you've got to look at things over a complete market cycle. And yes, it's boring for us to sit there and say, well, Tesla's growing at 15% a year, but we're going to assume 6. How can you assume 6? Well, because guys, it's probably not realistic for one reason to grow 15% a year, but two, there are going to be economic shifts.
We're seeing one right now.
Exactly. We're seeing one right now.
Who's to say that this is not going to happen in 6 years from now again?
Exactly. When recessions occur, what are people going to delay? They're going to delay a car purchase. Why?
Especially a new car.
Exactly. You're going to sit there and say, wait a second, my car is fine. The economy is a little unsteady. Let me delay my purchase for a year. That's not an unreasonable assumption to make about the future. Now, in the last 13 years, we haven't really seen much of an economic pullback, except for COVID, which was a government-induced pullback in which they wrote checks. Other than that, what have we seen?
Nothing.
So it's hard for us with the fact that we don't experience it. John Galbraith says that financial memory is 4 years long.
Yeah.
We're 14 years away from the last real recession that was caused by a natural cycle.
Nobody remembers that at all.
Especially the young kids out there who are, our average viewer is 25 to 45. Even if you're one of our 45-year-old viewers, you were 30 during the last recession, the last real recession that was caused by a real economic slowdown.
I was just coming out of high school.
Yeah, you don't remember that. You don't remember that at all. At all. So when I look at Tesla, when I look at any company that's growing, I sit there and say, okay, they're growing well and the prospects of the future are amazing. But remember, just like companies, just like your personal life, when you're in a bad position, imagine the worst time you've had personally. Did you think you were going to get out of it? You probably felt like I'm stuck in this. Yeah. And imagine the best time you've had personally. You probably thought, I'm unstoppable.
I'm going to stay here forever.
I'm going to stay here forever. This is going to happen. That's not realistic. Either one is not realistic. So the same with companies. A proper margin of safety. So what is margin of safety? Margin of safety is where you sit there. The great analogy that Warren Buffett has is, listen, a bridge builder, if they want their bridge to hold 10,000 pounds, they build it to hold 20,000 pounds. That's a margin of safety. You don't build the bridge to hold 10,000 pounds when you need it to hold 10,000 pounds. Right. Why? Because there's no margin of safety there. Any sort of break in concrete or anything shifted the earth and your bridge is falling. So that's why you build it for 20,000 pounds. Same thing with investing. If you think that the company, and this is what's so great about our stock analyzer tool. When I look at our stock analyzer tool, the reason it's so wonderful is it allows you to make your conservative, your reasonable, hey, this is probably going to happen, and your let's say they kill it assumptions. It doesn't sit there and say, no, don't buy this. The reason I use the high assumptions, though, sometimes is to sit there and look at Tesla and say, this is how ridiculously overpriced Tesla really is. Mm-hmm. Right? So they're already offering discounts. And this is the company, by the way, that was all about you don't negotiate. Mo and I were just talking about this the other day.
We were talking about it yesterday. How great it is. You just go in there and buy your car and you leave.
This is the price.
Yeah.
But just like you go to Best Buy and there'll be a promotion on something, they'll offer a manufacturer's discount for a TV or computer. Okay, but that just shows Lucid also did it.
Are they?
You didn't see that?
No.
Lucid also offered a discount in their car. Now, granted, they offered it on their $150,000 car, their high-end car, but the point is, with an economic slowdown, it affects vast majority of companies, vast majority of people, especially luxury items. So a year and a half, 2 years ago, we did a video about Tesla in which we were reacting to Meet Kevin. Meet Kevin was saying, oh, look at all these assumptions about Tesla, blah, 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 blah. It's going to have a 70 PE and all these things. And I sat there and said, what the F are you talking about? You don't understand. I actually sent it to Value Investing Friends with and the responses I got were incredible. Like, phenomenal. Is this a joke? Yeah. Like, literally, this guy thinks he wasn't factoring any margin of safety in there. Now, he'll sit there and say, no, I was safe. Guys, he sat there and said, well, the PE is currently 200 or 300. I'm going to be conservative and call it 70. 70 is not a conservative PE.
No, especially when the market over time does about 20.
No, not even.
Less than 20.
It's 15 to 16 over long periods of time.
20 is a really high PE then.
Now, you might sit there and say, well, Tesla's different. It's growing. Yeah, but eventually this doesn't go parabolic anymore.
And I can show you that it's not different.
Growth is more like this.
It's not different because they're offering discounts now.
Correct.
So it's not different.
Every company that kills it will eventually stop killing it. Yeah. Go look at history. No company dominated forever. And this is how growth really goes. It goes, as you get larger and larger and larger, it's harder and harder to grow. Look at our channel. Our channel gets 5,000 to 10,000 new subscribers a month. When we first started, when we got 10,000 in a month, we were at 2,000. We go to 12,000. That's an insane growth level. Well, guess what? As a percentage, though, when you have 180,000 subscribers, 5 to 10,000 isn't as big a percentage. Same thing. The exact same thing. Growth doesn't go parabolic for long periods of time. And as a good investor, your job should be to wait until the story has changed where people go, oh, I made assumptions of 20% growth. It's not happening anymore. I'm out. Let's look at Tesla itself right now. And it's no coincidence that Tesla...
This is usually what happens. This is Peloton, for example. This is usually what happens when you go parabolic. You go up and you come down.
Yeah, look at Tesla.
Parabolic rises and falls go hand in hand.
Look at Tesla. Same thing. Tesla's down from a high of 414 on November 3rd of last year, a year ago. It's currently at 174. I'm sorry, guys. It's going to do 40% more cars this year than it did last year. If you really are right that valuation doesn't matter.
This should be up here.
This should be boom, all the way up here.
Yep.
Doesn't make sense. But here's the reason why it didn't work. Because these assumptions were based on major growth levels. Even if they happen, when you finally get to those assumption levels, you already paid for that assumption.
Yes.
You already paid for those rosy pictures.
Yeah, value and price don't match up.
Let's look at Aaron Judge. Just an hour ago, he signed a 9-year, $360 million contract.
What do you do, Tom Brady?
Look at Tom Brady. Tom Brady went 199th overall. Now, did we know he's going to be Tom Brady? No. But did we sign the first pick overall in that same draft year to a much bigger contract because he could be the next Tom Brady? No. You don't give the full potential here. Let them get to that potential. There are going to be hurdles. There are going to be recessions for companies. There are going to be shifts in taste.
Yeah.
Absolutely. A major shift in taste is going to happen. Listen, we like Tesla vehicles, but guess what? You're already starting to see a shift from Tesla away from Tesla. Why? Because people are pissed at Elon Musk because he owns Twitter and they call him a monger and anti-free speech, which is completely opposite.
And the funny thing about Tesla is you look at, they didn't have a lot of competition in here, right? I mean, there was whisperings of it, and now they do. Porsche, Ford,
and the
Audi,
gap,
BMW.
And the gap between Tesla and everybody else is going to narrow.
It's going to get smaller.
And guess what, guys? These things happen. Would you have guessed that Elon was going to buy Twitter? Oh, I would have never guessed that. Exactly. You can't even guess what's going to happen in the next month, guys.
Forget him buying Twitter. If I would have asked you a year ago, do you think Twitter will be a private company at some point in the next 5 years?
You would have said no.
You would have said no.
That's the point. Even Twitter, guys, you can't guess what's going to happen next month. You have no idea what's going to happen in the next 10 years. Does that mean you avoid all investments? No. Just give yourself an ample margin of safety. Don't buy based on the rosiest of assumptions. Your life will not work out based on the rosiest assumptions.
Right.
We're all human. We make mistakes. our assumptions are wrong. My whole point about this is every video we've made for the last 2 years has been, guys, be conservative at all times. You will have opportunities to buy great companies at great prices based on very conservative assumptions. And when you do that, you will sleep very well and you'll do better at night. Follow our channel. If you like our software, if you want that stock analyzer tool, we have a great special 1 month risk-free sign up for $1 a day. In a month, if you don't like it, email us. No questions asked, your money back. I'm very confident you won't do that. Thank you very much for your time.